Hello everybody, today is August 22nd, 2023, and this is my experiment investing at least $1 per week in each of 41 different dividend stocks, investing at least $1 per day in each of 7 monthly different dividend stocks, allocating at least $12 per day in 4 different ETFs, $1 per day in each of 3 different cryptocurrencies, and investing $1 per week in each of 4 different cryptocurrencies. So if we come over here and you look at this dotted white line, you can see the start of the day, and you can see it's a little bit in the upward trend from where it's been. It's constantly been in a downward trend. If you look at the 1 week period, we can see we've been constantly going downward. We look at another 1 month period, and we can see also it is in a downward trend. 3 month period, you could also see right here, it was actually going from up here for was it over $1,000 gain, almost 5%, over 5%, and right here it just plummeted, and so I lost all that for the 3 month period. It's still in the negative, but I'm not too concerned. Now is a good time to maybe just keep going, sticking with it. It's in my own mind. Year to date, we can see right here, January 6, 2023, first time investing in my life, and then all of a sudden it's been going in all sorts of weird directions. Now I'm still expecting it to go more down. The economy is still in a very interesting state, so I'm not too worried about it. This is money that I have in here that I don't plan to use anytime soon. It is purely for investing to see how things are going. Now, if we look over here at cryptocurrencies, we can see finally Ethereum has dipped down into the red from when I first started investing. Bitcoin is finally also going down to only $6 gain. XLM is still way high up. We'll see what that happens after everything is going in the way direction it's going. I have a bunch of other dividend stocks that are doing, not too bad. Some of them are, well, not some of them, most of them are in the red. Very few of them are in the green and are doing okay for right now. Different categories. So I have a mix of many different things. I've changed my strategy throughout the time. We have the monthly dividend stocks from EFC to O. And then we have our ETFs right here. These were all in the red not too long ago, but they're now, VEO is finally in the green a little bit today, but all of these were in the red. Now, one of the things that I missed on in the last episode is if I come over here and I hit the little gear menu right here, and we come over to history. Inside history, we change this to dividends. A bunch of dividends did come in. So the dividends that did come in, and we'll scroll down here, and we're looking at these ones. We'll look at the month of August. So UAN finally paid out their $4 dividend. And again, well, I don't think I mentioned this, but I apologize for not posting last week or however long it's been since I posted. I got busy with doing a lot of family stuff and in reality stuff, and as well as was trying to work on a cert. So make sure that I become more valuable in this time of crisis, in this time of need. I want to make sure I don't lose my job or anything like that. So I had to work on a bunch of internal stuff. Now over here, you can see JEPQ and JEPP. They're monthly paying ETFs. We scroll down here, we'll see that they also paid last month during July. So $10, $11.92 for the month of July. And then for this month right here, month of August, paid out $17.65 for JEPQ and $12.23 for JEPP. Now I have the same amount of money in both of them. So we're going to see and compare how much they earn and invest in the same amount in each of them. So same amount of money, same time they bought in, and we're just comparing to see which one does what. But not just compare. I know they're completely different ETFs, so we'll see how they do. Same thing like VEO and QQQ. Same amount of money in them, so we'll see how they compete against each other in that particular aspect of how they're doing. Now, another one that we're looking at right here is the UAN aspect. I have about $2,000 in there, and they paid out the $4 dividend. I was actually thinking about possibly trying to sell UAN off as the up, but then I just realized, you know what? Again, I'm not here to play the market or be a short seller. So I know it's down, I know it's 127, but what I was thinking, because there's this other strategy, is what people do is they buy in during the dip and then they sell off when it's high after they announce the dividend payment. The dividend payment was balanced around August 11th, but you can see right here, it was already starting to dip down like crazy. And I don't want to sit here and manage and sell off. And with the dividend payment being what it is, because it still is a really high dividend payment for what it is, even though it was a $4 dividend payment, I was thinking about comparing it to something else. So if I was comparing it, and I come over here, and the one I was comparing it to would probably be EFC almost. So if we come over here, we look for EFC's comparison. EFC, I have about $160, $170 in it. So it's paying me $1.73 for $170, right? So if I put $2,000 in it, it would pay me probably about $20, 20-ish something, 20, $30 per month because it's a monthly payment. So even if I put $2,000 in there and it paid me around $22 every single month, that is only going to be around like 64, 67 or some odd dollars. And so if you take it where UAN, this pays you quarterly every 3 months, even at the $4 payment, that's still more than what EFC is. So if even if it's like the $2,000 in EFC, which pays monthly, I was like, okay. So UAN is still doing better because EFC is paying a lot for just $170. Now there's a bunch of other ones in here that's paying a lot too, like ABR. ABR is $3.47. So I mean, you could move money around, but you have to realize if I sell this off and then rebuy in something else, I have to think of the taxes that are involved with it, which I'm not here to be a day trader. I'm here to be a long-term investor. So whatever money I stick in and whatever I put in, I'm just going to hold on to it and stick with it and see how it goes. I know that there's a lot of controversy. There's a lot of people saying do this, do that. I'm not listening to the white noise and I'm not stressed about it. Like all this time when I didn't post, I wasn't even really looking at any of this. I wasn't looking to see if things are going up or things are going down. I'm not worried. I have everything set to recurring investments, and it's just buying in whenever I have it set to on my schedule, and it's just doing what it's doing, and we'll see how things play out. And again, I don't need this money. I mean, I did check it here and there, and I saw it dipping down, but I wasn't scared because I've already experienced that here. I came over here and I experienced it down. Okay, then I experienced it again, and now when I even here, I experienced. Yeah, it went down. I'm not scared. I'm not worried because it's making it way slowly back up again. It may not make itself up to the same peak again, but it's not anywhere near where I'm like I'm worried about it. I don't need this money in any emergency, any pinch. I have everything saved up to a point where I'm doing okay for the way I'm doing. So, how is the economy doing? How are things going on? Like, there's just so many things going on in the world right now. Housing market's being weird, car market's being weird. Like the other day, I took my car in to go get serviced, and they literally put a note on my chair. They called me up. They sent me emails saying, "We want to buy your car. Are you interested in a new car?" And I'm like, no, I'm sorry, I don't want to buy a new car right now. I'm happy with the car I have right now. It's fully paid off. I'm not. I don't have any debt. I don't need to finance or buy another car right now. I'm happy with my means with my car. Plus, I work from home, so there's no reason for me to have a new or another car to drive around. And I barely drive anymore. Anytime I go driving, it's just for groceries or for my own means. I see this alarm's going off. Let's turn this off. So yeah, why buy another car right now? Like if you don't have a need to buy a nice fancy car, and your car you have right now is paid off and it's running and it's doing good, I don't suggest buying another car right now. In my own personal opinion, you don't have to listen to me, and I'm not giving you any financial advice. I'm telling you to buy or sell your assets or even invest in anything at all. I'm just giving my own experience and saying this is what I'm doing, and this is how it's playing out. It may go completely bad. I may lose everything when, the expected possibly stock market may crash, or maybe it won't. But either way, dividends have been showcased to last through some recessions. But people are saying maybe it's not a recession. Some people may say it's going to be a depression. Honestly, I just look at myself where I'm at. Everybody lives in their own little bubble. I live in my own little bubble too. I go to the market, I buy food. How much does it cost for my groceries for when I come back home? Normally, if I were to spend money on groceries, I used to be a goal and it's been $100 for the month. Now it's close to $300, $400 for the month for the same type of groceries. And I think about it, not too long ago, that's a huge, huge increase in buying in my groceries for my monthly living. And if anybody else is living in that, that's huge for them too. And if you think about it too, same thing like student loans. Like, oh, I don't have student loans. I don't have student loans. That's true for me. But there's a lot of people out there that do have student loans. Like I know somebody that was in close to their 50s and he's still paying student loans. It's like, oh, I'm just doing the bare minimum. You're 50 years old and you're still paying for your student loans at the bare minimum. The interest you pay for, you've paid so much more than what if you just had paid them off as soon as you had it. I know not everyone has the ability to do something like that, but when you really think about it, if you're paying the minimum on your credit card or anything like that, you're spending so much money on to the bank on the interest payments. And it's way beyond anything anything that you can imagine. Like you're probably not doing the math on it. It's the same thing like buying a house. When you buy a house, you pay the price. Say for example you buy a $300,000 home or $500,000 home. That's just the price that they have listed. The interest payment you're paying on whatever your interest is, and right now it's like 7%, 7.5, whatever it is, and probably like close to 8% already. You take that and then you put it on your house, and you're paying interest payments on the first 5, 6, even 10 years. Most of it's going to the interest payment. So instead of paying just $500,000 for the home, you're actually paying 800, 900,000, almost $1 million for this $500,000 home if you're making minimum payments. Or if you skip a payment or anything like that, you're paying so much more. So, honestly, if you want to work for the banks or for whoever it is you're getting a loan from for the rest of your life, you're more than welcome to do that. But really, really think about, and I think the application just crashed. Well, if you enjoyed this content, thank you so much. Um, Please feel free to smash the like button, leave me a comment, tell me what you like, tell me what you don't like. If you want to subscribe, feel free to subscribe. If you don't want to subscribe, that's okay. Come back once a week, once a month. Check out what content I have here. Thank you all again for being here. And again, I apologize for not posting last week. Got busy with real life stuff. And you all have a wonderful rest of your day.